The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 1st. How about that, folks? September the 1st, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, the easiest way is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift out there, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go try to figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. I could not be more sincere when I say that. But more importantly, though, I'm here to serve you. So feel free to pick up that phone. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 13 points. She's trading at 18,387. S&P's off 3 points at 2167. NASDAQ Composite, slightly green. It's up 8 points. It's trading at 52 and about 21 bucks out there. Russell 2000 off 3 points at 1237. Gold's up $6. Silver's up 24 cents. Light sweet crude back $1.33. Leading the charge here to the upside, we've got Synapsis Therapeutics up 21 bucks. That's 115%, maybe a buyout or something going on there. I don't know. Maybe they cured Zika. In any event, we'll go take and try to figure out what it's at least doing. Well, we know what it's doing. It's a little rocket ship. It's on its way to. Oh, speaking of rocket ships, that was a bummer this morning. I didn't actually see it. I just saw something flash across the screen. I was too busy doing other things. But the rocket on over at Kennedy Space Center blowing up or something. I don't have the details, so don't. I'm not exactly sure. Hopefully, nobody was hurt during that blast. Palo Alto Networks, you've got that up about $8, 6%. To the downside, we've got Genesco Inc. That's off $22, 31%. Yikes! Tesla is off $9. Maybe a little sympathy there between the Elon Musk's SpaceX rocket not making it through the morning. Vectrus, VEC is a ticker symbol, down 18%. Costco is off about $5. So let's try to figure out what is going on in the marketplace. Can you say tests of hammer candles? Actually, first what we want to do is want to come back here and answer the first question that was posted inside of the Tiger's Den. And that was from Frank from Gloucester. I like that. I know I don't say it properly, but I do like that. And he was looking at GLD, looking for a trade inside of the GLD or DUST with the ETF for the miners out here. So let's go take a look at those first. So we'll come back to the markets because pretty much it seems like every day at this time, it seems like it's almost the same story, right, with regard to the markets. We see a nice little sell-off into the early morning hours by day's end. In fact, in this case here, much earlier than day's end, we see all of those losses get recouped. And we, in essence, if we agree, if both you and I can agree on one thing, and that is that the body of the candle is the essence of price. So in essence, we're looking at opening and closings out here. That really tells the picture. Otherwise, it's just like the candles, the wicks inside these candlesticks, the wicks, the shadows, upper, lower. Nothing more than the extreme emotion, like a temper tantrum. The market throws out these little temper tantrums, but it's really the body of the candle that is the essence of price. We take a look at those closes out there, and we can see that we're basically trading in a very narrow banded range. But the bias is definitely to the downside, and there's no getting around that. I will tell you, and I know you said, Steve, you were going to get to gold, but you haven't even gotten to gold out here. I'll just put a feather, or I'll just put something for you to think about. Something to think about. I can make a case. Of course, I can almost make a case for anything, right? That's not what I'm talking about. I can make a really good case. Now, did I say really good? I mean extraordinarily good case that the market is getting ready to form a bottom. I know I've been calling for a top right around September 9th, which is a great day. Hey, by the way, I was born in the month of September. And and if you were born in the month of September, especially in the early season, the early part of it, we'll say 10, 15 days on in, you realize that what you and I know is we know when we were conceived. I mean, of course, everybody else can kind of do the math backwards to try to figure that out, right? But we know that we're New Year's babies. I mean, how cool is that? So we get to celebrate the mere fact that we know what our parents were doing on New Year's Eve. Now, some people might say, that's, thanks for really sharing. But actually, I kind of think that that's pretty cool out here. But like I was saying, I could make a case, a great case, that the market is going to form a bottom tomorrow. And it's going to move prices. You can forget about September 9th. It's going to move prices higher for quite a while to come out there. Put that feather. Maybe you're going to put it in Blow My Bubble or something like that. But this is something we really want to give some serious consideration to. Anyways, back to gold. We haven't even gotten to gold, but let's going to try to answer this question here for Frank from Gloucester with regard to the GLD. Now, what gold is doing, I don't know how it's going to end today, but if we take a look at what gold is doing, we can see an A to B equals CD pattern. We go from the high out here. I don't have the date on it, but we'll get it. If you watch us on TigerTV, you can see the 1-to-1, and this was a hit yesterday. Yesterday's move to the 1-to-1 was not the buy signal. But today, depending on the close, if we were closed right now at 1:13 p.m., the answer is we have a buy signal. You'd like to get confirmation, meaning you'd like to see a higher close tomorrow. So what we have going on as we speak right now, and I'm going to answer that question to you, Frank, right now as of 1:13 p.m., you have a buy the D point of an A to B equals CD to the downside. You have a Gartley buy pattern inside of gold. Now, if in fact that comes to fruition, where is gold likely to move to? So do you want to buy dust right now, knowing that gold is forming some type of potential bottom out here? Now, I had suggested that the first place where price is going to move to on this move higher in gold is going to be 1333. That's what it should do. What it does, could be a totally different story. But we've got to go with the information that we have available right now, right this second, and you've got a buy the D point. You've got to close with a bullish engulfing candle. That means we need to see Goldilocks today. Close out at a price. Come on, get on my screen out here. Oh, what the heck is going on? There we go. Now we got the crosshair out here. You need to see, sometimes, sometimes you've got to see a close above 1314.70. It's just a couple bucks, that would be ideal out here. And actually, if you actually see gold go ahead and move up to above 1319.20, then you got a key reversal session on top of it. But 1333.40 is the next move. Probably above that is about 1358. So, Frank, now is not the time to go into the dusty Rhodes, as a matter of fact. Now, you don't want to be doing that as we speak. All right, we're going to be going to a break. Then we'll spend more time actually taking a look at charts. I'll try not to talk about New Year's babies and stuff like that, but how cool is that? This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, one of the great things that Steve Jobs gave to us was that belief that what we should do is think different, right? I mean, that's kind of the whole Apple mojo, at least it certainly was. I think that it still is out there. And that is actually the way that I approach life. You know, and as Pete pointed out in the Tigers Den, he said you're going to go against the September Bears out there, right? Because he's exactly right. You know, you go take the CNBC, everybody else, they'll go ahead and they'll throw on their screens how bad August and September are as far as months, and there's no question about it. But you've got to always dive down a little bit deeper. You know, you can't if you want to be Michael Jordan, you can't play basketball the exact same way everybody else does. Have you ever seen? I don't know what you do to search it. I was going to say Google it, but you search it. But if you go to search through YouTube, go through YouTube videos, and type in something like Michael Jordan greatest fake ever. And I think it is a classic. It is an absolute classic out there. If you want to be a technician, Michael Jordan was an extraordinary technician. Wayne Gretzky, an extraordinary technician. Each of you guys have run businesses at home as a parents. You're extraordinary at what you do. When it comes to this game right here that we play with regard to what are the Bulls and Bears doing out here, you want to make sure that you are that same type of extraordinary technician and that you're thinking differently and that you are looking a little bit further than what everybody else, including I, am feeding you. And I can tell you, and I was grappling with trying to figure out, you know, what is this market doing? I know what it's supposed to do. 3 months ago, I said, you know, September 9th is going to be a turn day to the downside. It still may be the case. But I'm prepared that it could go the exact opposite way. And when I say the exact opposite way, it wasn't like I was trying to prove a point. It was when I dug deeper and I found what I found, I was like, holy cow, boy, does this make sense. And it plays into today's facts and circumstances like nothing else that I've actually seen before. I actually, based on what the market does, will be able to predict, I think with accuracy, who is going to be the next president out there. We won't have to worry about polls. You may say, oh, you can already figure that out. Well, If you can, I would say, well, then tell me what it is you figured out, and tell me how it is you're trading the market, because the two are linked. Okay, so there are other questions that were out here. I said I would look at some more charts. I haven't done that here just yet. There were some questions here. Let me just see. So yeah, betting against the September Bears. Yeah, I don't care. You know, it is the market. The patterns are what they are inside the marketplace, and that's how we'll go ahead and trade them. So somebody was asking me to take Expedia. So let's go take a look at this. I think I've fallen behind. Sorry about that. But if we take a look at Expedia, now what I don't know is an Expedia says, can you take a look at Expedia? I've been in this for several weeks. Congratulations, and have a small loss. But today is the first real move up on volume since I bought it. If this is going up to test a previous 117 swing point, I would exit the position today. Okay, well, here's what we know about Expedia. First, you've got a nice bullish reversal signal today. Yes, it's up with some volume, and you have a bullish reversal signal that is also concluding, Dano, at the completion of an A to B equals CD point. So if you were looking to be, and here's your A point out here on July 28th, your B point down here on August 4th, your retracement in that little shooting star out here on August 15th. You can see that yesterday, 2 days ago, was the one-to-one price objective. Just because you hit the price objective doesn't mean you're going to turn right then and there. Yesterday, just a slight bit lower, and then today, you know, moving on up. Now, let me go on my other chart out here, because that's going to give us that oscillator unchanged line, EXPE. So we want to see where price is trading in relation to that, because if the price oscillator rises, you know, that's a positive thing out here. Oh, you've also got a Tom DeMark setup count, 9 count. It's like a TKO sometimes out here. If we take a look at it, and when I talk about a TKO, take a look at the 9 count that occurred out here on July 26th. I won't go into detail about what all this is, but included in my next workshop that I'm going to do, I think in a couple weeks, we're going to, because I've been spending so much time with this, we're going to take a look at this. But look at the top out here, by the way, Dano, back on the trading day of July 26th out here, market since then has gone ahead to make that A to B equals CD down, which, by the way, when it did, it was on August 30th, and you got another potential, you got a 9 count. Now, you see the red squiggly line on my screen. Its price is about 113.37. 112.27 to be exact. You'd sure like to see price get above that. Right now, all that price has done is move back into a level of resistance. That doesn't mean be too concerned. A little bit of concern out here. But you've got that bullish reversal signal, that 3-river morning star at the end of the A to B equals CD. So what does that say? That says if you get above that 112 level, and by the way, on a TAS market profile, the number is 112.85. So we've got 2 levels of resistance that you want to see Expedia clear. If it clears both of those, then that says that price ought to head back to the 119.77 versus the 117.99 area out there. And so that becomes a possibility. Now, this is also a Gartley buy, right? You had a nice move up in Expedia off of the low from June 27. Now is your first correction, your first A to B equals CD to the downside. And all Gartley buys have 5 outcomes. The ultimate outcome is when this turns into an A to B equals CD pattern to the upside. Don't know if that's going to happen. But I will tell you, if Stevie is right, it's not really about me being right. It's about me recognizing a pattern that is out there, and I won't know for sure what the market is going to do probably until about September 13th, 14th, 15th, but we'll have a pretty good idea out here. If it really is forming this bottom that most people don't anticipate or expect, well, now you will. And you would then see Expedia probably make its way up to about the 131.45. But one step at a time. We've given you the numbers that you want to pay attention to and see closes above over the course of the next couple of days out here in order for even this pattern to possibly have some potential. So I hope that that is helpful to you out there. If the market's going to go higher, though, well, logically speaking, I don't know if it will or it won't, but logically speaking, we ought to see bonds continue to move lower. So what have bonds been doing today? And I'm not referring to the James Bond 007. Hey, by the way, I had the boob tube on last night in the background, and they were talking about, Adam, one of the stations there, that was there 24 James Bond movies out there. Can you believe it? I mean, how cool is that? Let me see out here. Oh, I didn't mean to do that. And I think they were playing them all. I've seen a lot of them, mostly when I was younger, you know, and so forth. But 24 James Bond. That means there's 24 James Bond women out there. whatever that means. Anyways, I'm trying to pull up. That was kind of a strategic pause. Here we go. I was trying to pull up the December contract for the 30-year Treasury. Now that we've got it up, I can go right to it. And the bounce that we've seen thus far today is run right into two things out here. So bonds are actually trying to change their character. They haven't completed that yet. You've got a descending trend line. That's the blue diagonal line. You've got the oscillator and change line. That's the red line. So far, bonds have moved right up in that area and have found resistance. If the market's going to go higher, with any kind of significance out here, you'd likely think that bonds have run into resistance. If they clear this level out here, then maybe scenario number one, where the market actually forms a top by the end of next week, would be in play. Steve Rhodes with TFNN. I'm not trying to play both sides of the fence out here, but I've got signals that say tomorrow could be a pretty major bottom. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 4 points, S&P down 2. Let's go out to St. Pete and speak with Lori. Lori, thanks for calling. Thanks for listening. Thanks for holding. How are you doing this afternoon?
Very good, Steve. You know what, Steve? I just went on the computer to see what was going on with the market, and I just saw, I've kind of followed the gold stocks quite a bit, and I just saw such a big turnaround today. I didn't give any specific symbols because quite a few have just jumped, like NAK and NGD, VGZ. They've all just jumped with volume and price. So is there something happening is it a turnaround, do you think?
Well, what I will say is that the mining equities follow the direction of gold and silver. And I don't know if you heard the first segment.
I know. I just turned it on. I'm sorry.
No problem. So let me just show you what has actually transpired so far in gold. And it's going to be the same thing in silver. Silver occurred a couple of days ago. But today, this morning, as we speak right now, as of 1:31, what gold is doing, gold is confirming a Gartley buy pattern. And it's doing that with regard, because today is a reversal candle. It's a bullish engulfing. So that's as of 1:31. I don't know what it's going to look like at the close. But if gold retains the character from a candlestick standpoint, then you've got an actual buy signal. The question becomes, is this just a little bit of a counter trend rally? 0.382, 0.618, taking gold up to 1333, then maybe 1374 or so, or is this the beginning of a potential new move to the upside? You know, we really won't know that. But with regard to the turnaround that you are seeing inside the mining equities, one is because of the gold buy signal that we have. Second, it's because of the silver buy signal, which came in here. That also formed an A to B equals CD pattern. That looks like this. Are you watching this by any chance on TigerTV?
I am.
Okay, so here we've got silver. Silver made a 1 to 1.272 A to B equals CD to the downside. Nice little bullish engulfing candle on August 26th. A little bit of follow through the next day. Hasn't really done much other than just move sideways. So you've got that completed Gartley buy pattern. That's the first thing we know. Number two, as price was moving down inside of silver, was finding support at the top of its weekly TAS market profile. That was old resistance, which now has become new support. So there's really nice support here. We should expect silver to bounce up to about the 1945 level. What I'm really watching in the case of silver, now this is the continuous contract. Here's the actual current contract, the December contract. I'm watching for silver as it gets up to about, right now, 1316 is the number. It's very possible, Lori, that here I'm going to give it two outcomes. If silver gets up to 1316 and then starts to reverse course and move lower, then all we've seen is just a very small counter turn rally, and we'll see the metals, we'll see silver move much, much lower. We'll see the mining equities also do the same out here. If, on the other hand, silver is able to overtake that red line that is on my chart, then we could have a total change in character trend out here. So with regard to some of the mining equities, which one did you say you were looking at? Was it Endeavor? So which ones were you looking at?
You know, there was NGD.
NGD. Okay, so let's take a look at new gold. You have a nice wide-ranging bar out here. You've got what looks like fairly good volume today, 4.5 million shares after doing 4.9 million yesterday and 5 million the day before that. You've got an A to B equals CD pattern in this as well, so that gives you a Gartley buy. That looks like this. Your A point out here was on August 1st. Your B point down here on August 17th. The retracement for 1 day makes a 1 to 2 A to B equals CD. So this says to us, you've also got a confirmed, I don't know why I use the word got, but you also have a confirmed Gartley buy pattern. This would suggest that we would see new gold bounce up to about the $5.38. Now, are you inside this equity right now? Were you short?
Actually, I was I'm not. I'm not short and I'm not long. I'm out. I got out of the market when everything was going so high, and I thought, well, I better get out because, it's bound to go down. And it did. But no, I'm not in any gold stocks or silver stocks right now.
Okay. We definitely have, at this stage of the game, right now, as I say, at 1:30, we have bottoming patterns that are out here. And the question becomes, is this a significant bottom? Is this just nothing more than a natural bottom? We're going to see a counter trend rally or not? And what we have to do is we really want to be paying attention to what's going on inside of both gold and silver to help answer that question. We also want to take a look at what's going on, believe it or not, inside of the yen futures, the Japanese yen futures, because they have a great correlation with regard to what gold and silver are doing. This is the 10-minute chart, because you asked the question. You said, hey, I just stepped away for a while. I came back, and I've seen a big turnaround. The chart that you and I are looking at is not gold or silver. The chart that you and I are looking at is actually Japanese yen futures. And if I put up a chart, I don't have it handy right now, but if I put up that chart where we took a look at daily or weekly comparison of the direction of the Japanese yen and gold, you'd see a real direct correlation. One of our Denners is the one that really turned me on to this. It might have been Danny in Atlanta, but and you can see the huge wide-ranging bars, and therefore, now it's not going to move like pip for tick, or anything along those lines, but it does have a good directional correlation. So you've got the Japanese yen headed in the right direction. You've got gold right now, and it has formed at least a short-term bottom. That much we can conclude.
Was that a short-term bottom?
Was that? Yeah, at least. Short-term bottoms can turn into, something more than that. I think it's a short-term bottom, but you could get one heck of a nice bounce out of it. You really could. Right now,
get a nice bounce, huh?
Oh, absolutely. And like you were pointing out, let's just take a look at the volume. Let's just go to the main mining ETF, the GDX, and you've got volume today so far in it, 53 million shares. Was moving lower yesterday with 76 million shares. So, and this is the completion of an A to B equals CD pattern as well. I'd say the GDX ought to bounce up to about 28.18 as we speak.
Okay, so Steve, do you think it might be a good idea for me to go into a couple of these right now?
Well, tell me sure. What's your trading style?
I generally like to keep them for a long time, but I understand how the market moves up and down, and but I prefer to stay in longer. But I see what you're saying. But a short term, a bounce could be.
Then here's what you need to do, because I can answer that question. That's why I was trying to get some additional information for you. If you want to be in this thing from a longer-term standpoint, you must see silver close above $19.17. I'm going to give you the gold number, so I don't want you to take any action until you see that, because you are looking at more of a longer-term approach to this, and I want to see a longer-term message in order to be able to give you that answer. And in the case of gold, if you watch this on TigerTV, you see these three lines that I have that are on my screen, red, green, and blue, my little Stevie rainbow. When those converge there, it says price ought to pause in the direction that it was going, which was to the downside. And then price ought to bounce right up into that level, which is at 1333 right now. If you see gold close above 1333 and silver close above the level that I gave you, then that was signaling to us that this is a buyable bottom from an intermediate term standpoint.
Okay. Yes.
Okay.
Yes, I appreciate that. And I just got panicked because I kind of liked being in the gold in the metals market, and I did fairly well the last couple of months. But
that's great. Hey, we've got to go to a break. You can stay on if you'd like.
That's all right. But thank you very much, Steve.
You bet, Lori. Have a great day. This is Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Kind of a flat market out here, something that you'll want to pay attention to. These are 5-hour charts that we're taking a look at. The NQ upper left, the ES upper right, lower left is Russell 2000, lower right is the Dow Futures. Now, these are charts that were provided to my subscribers at 8 o'clock this morning, so they knew what to anticipate both to the upside and to the downside out here. And interestingly enough, I'll just go ahead and put up the ES Mini here. The push lower this morning, I haven't touched anything, so this is the exact chart that they received. The push lower out here pushed right down into support. Support being the bottom of a descending price channel out here. Moved right down into that, boinged right off of that, whatever boing means out here. And right now, price has found resistance at the bottom of its a 5-hour chart out at the 5-hour TAS box out here, which is priced at 2169. If the market is going to make any type of bottom, you'll see a change in character. You'll see price move above this. The ES Mini right now is not the one that is up there testing the high. The one that we'll want to pay attention to, because this can be the leader of the pack, is the NQ. Now, in the case of the NQ, didn't get all the way down to the bottom of that descending price channel, but we can see it has moved right up to the top of that, has not been able to take it out. Taking it out, you would see the NQ today close above 47.92. But the longer that it goes, if it's towards 4 o'clock, you really need to see it close about 4,800. And then that would say, okay, that the NQ is playing its cards, that, however, it's going to respond tomorrow, because many people might think that the jobs report is all that is cracked up to be. I did follow the jobs report and went back and tracked every single first Friday of every month, except for holidays, and to see if we could find an edge on it. I eventually just kind of got tired of doing it because there wasn't so much of an edge out there. It just what proved to me was just pay attention to other patterns that are present inside the marketplace. So patterns. We also want to take a look at things that are very important out here. We'll go take a look at the Qs as an example. Qs are up 34 cents today. Now, what did the Qs actually do earlier in the day? What the Qs did was they were testing. I don't want to look at the Qs. I want to take a look at the S&P 500. My apology. What was the S&P 500? I'll eventually get my shtick together here. What the S&P 500 was doing here earlier is yesterday was a hammer candle. So that's going to be a very important level for you to look at. Today was nothing more than a test of that low. And so far a rejection, which is an indication that the market is actually trying to hammer out a bottom. So the level to be watching in the S&P cash index out here is going to be 2161.35. If you close below, don't pay attention to these profiles because they're not pertinent, not necessarily as reliable on an indice as a future versus a futures contract, but there's your hammer candle. You can see a test of it. And we take a look at the SPYs. The SPYs have some decent volume out here. So if I switch over to the SPY as an example, I think you're trading at about 61 million. Let's just get a current update volume-wise. Let me go over to this. Let me punch in the SPYs are 61 million. We've been trading for 4 hours and a quarter. So it says the volume should be about 93 million shares. It keeps getting reduced a bit. Yesterday's total volume was 85 million. So it looks to me like volume ought to dissipate. We'll do less than the volume yesterday. You had a breakout, a version of a breakout occur on August the 5th. When we had that little gap up there with volume of about 72 million shares. So you got a test of a hammer. You're pulling back into a level where things have broken out. You're going to have a rejection of a swing point. Now, that swing point had volume of only 46 million shares out here. So, watch the ES Mini. Watch that descending price channel. Watch it overnight. Watch it in the morning around 8 o'clock or so, 8:30, whenever the jobs numbers are released. I think it's 8:30 in the day out there. Speaking of the Qs, I mentioned the Qs. In the case of the Qs now, as an example, from a volume perspective, 2.8. It's going to do about 19 million shares. So let's turn the Qs on. That is light volume, not as light as a couple days ago when it did, 11 or 12 million shares out here. What did it do, 11 or 12? What did it do? Yeah, 11 million shares out here on August 29th. This had broken away with 23 million shares. Today's going to be another light volume test. So it's a key level of support, 116.13. This is the third test today of that. Hey, at a minimum, it suggests you can't bust them to the downside. What this is going to try to do is go bust it to the upside, which says you want to head to the August 23rd swing point between 117.51, maybe even take out the 118.01 level. Now, if it's going to do that, we don't have any real confirmed signals yet that that's what it wants to do. What the Sam heck did I just say? What do I mean? Well, what I mean is that if I take a look at still the breadth, the market breadth, which is muy importante out here, if we take a look at the market breadth, that's really where our advanced decline oscillator reading comes into play. That is the bottom panel of our screen out here, the lower left being the New York Stock Exchange, which, oh, by the way, the New York Stock Exchange also formed a hammer candle yesterday. Also, so it's very good. And it was a test of a test of a swing point. It was a test of the swing point from the trading session of August 2nd. It rejected that swing point, formed a hammer candle. Today was a test of the hammer candle out here. And look, I know this is maybe it's not frustrating for you, but look, if I just turn this off of candles and I turn this onto a line chart, look at this. I mean, there is, by the way, there as has been reported so many times out here, really narrow trading range boundary line. But if I ask you the question, do you know how often we've seen something like this since, I don't know, around 1990? This is the 8th time that we've seen something like this out here. So it's unusual, but it's not like it's so unusual like it never happens out here. But let me just go back to the candlestick chart out here. And so you got a nice little hammer candle. Now, what we don't have is we don't have that oversold reading. We did earlier. So earlier in the morning, when price was moving lower, we saw this oscillator reading. Right now, you can see it's priced out at minus 115, 114.86 right now. It got down to minus 150. Which then I was kind of licking at my chops. I say, hey, that's a good signal for a bottom, minus 150. We're not there just yet. Oscillators, Dow, NASDAQ Composite, even NASDAQ Composite moving a bit higher, still below zero. So it's not like I'm going to issue. I said the market is, I can anticipate, I can give you really good, really solid reasons why the market wants to form a bottom tomorrow. And it is not because everybody is looking in the right place. They're looking in the wrong place out there. And so you want to anticipate that, especially with the market having headed lower. And as AG says, he says, Steve, banks and tech outperformed lately. What does it signal? What it signals to me, AG, is a bottom. It absolutely signals a bottom. I mean, it is an excellent. You realize that the ETF, the XLF on a weekly basis, let's go ahead and put this on a weekly basis for you, is a confirmed A to B equals CD to the upside. Confirmed A to B equals CD to the upside. If we take a look at the B point, this is a weekly, that's a daily chart. We wanted to put the weekly chart out here because weekly, I don't like using this, but weekly trumps daily, right? And if we take a look at it, You've got 157 million shares the week that began May 30th, and that was taken out with 158 million shares. I'm pretty sure those of us, which should be every single one of us who own Tom's book, The Art of Timing the Trade, know that that is a confirmed A to B equals CD to the upside. Where's that going to take price to? I should put those prices on the left-hand side of the chart, 25.72. And I can make the case much higher than that, 26.92. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off a couple. S&P is down a couple points as well. So before we went to break there, we were just taking a look at the weekly chart there for the XLF. And we had identified that it isn't a confirmed weekly A to B equals CD to the upside. Whether rates are increased or not doesn't really matter. That pattern was confirmed weeks ago, many weeks ago out there. So it wants higher price. And the semiconductor index is also extraordinarily bullish out here. Now, it's trading right now at the top of its range out here. And if you go back and you take a look at markets make tops out here, if you go back and you look at 2000 and 2007, just as an example for significant tops, I promise you, I do promise you, you will see the semiconductor index top out before the general market. You will see the financial sector top out before the general market. You'll see the Russell 2000 top out before the general market. Are those the conditions that we have right now today? going into this wonderful month of September? And the answer is no. Now, in the semiconductor index, you can make the case that it's trading right up into resistance, which it is. It's got a little bearish engulfing candle out here from August 30th. The high is 808.32. You're at 807.16. If this closes above 808.32, it will have taken out resistance. And you've got an A to B equals CD pattern that is underway. This is just the daily one. If we take a look at it, come on. There we go. There's your A point. Here's your B point. Work for me. I got to get rid of. I'm sorry. I got to get rid of the retracement level. I don't even know why that was in there. Anyways, that was confusing the heck out of me. So I would imagine it would confuse the heck out of you. The A to B equals CD on a daily basis for the semiconductor index 888.86. 926.32. You're at 807 as we speak right now. So if it takes out that resistance from August 30th out there, that is not giving us any kind of signal that it wants to move lower. Therefore, the suggestion, it's not just hyperbole. What the heck does that mean? I'm not trying to blow smoke up your skirt out there. With regard to the mere fact, I want you to think about it. The market could be forming a relatively significant bottom out here that's going to last for the entire month of September. That much I can say. If we take a look at the IWM, Russell 2000, I'll put the weekly chart back up on the screen. I had this up during the breakout here. There's your A to B equals CD to the upside. It is confirmed. Confirmed. You got a nice little shooting star the week of June 6th, 132 million shares in that case, and that was passed with 142 million shares. Again, I'm a pretty avid reader out there, and I will tell you that is a confirmed A to B equals CD. The upside, it says 133.19 is in the cards for the Russell 2000. Now, I'm not talking about the daily noise and the stuff that we're seeing out here because that's what's in place right now. I can't guarantee I wish I could guarantee you exactly what the markets are going to do. I promise what we will do each and every day, each and every moment that I'm on the air with you is we'll continue to use the information that the market provides for us. And it doesn't matter to me if one moment what we said, if that the whole this game, can just imagine being in Las Vegas and you were playing blackjack, and the way you got to play is you put your money out, they gave you the cards, you get to look at the cards, and you say, I'm going to take my money back. Would you play that game? And when you're playing that game, and maybe you took another card, and then you could go ahead and take your money back. Maybe you didn't take all of it, but you could take the majority of it back, right? Because you have new information. All that you and I do, all that technical analysis is don't get married to your belief last minute. It's use the information that you've got right now and see what the market is communicating to you and I. So there you go, as my friend George in my big fat Greek wedding would say out there. So folks, stay tuned. It is Terrific Thursday. I know David White's on vacation. We got the Tom O'Brien Show from 3 to 5, Andy Heck from 5 to 6. And I'll see you on fabulous, fantastic Jobs or Jobless Friday. And we'll see. Have a great day. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.